What's up, guys? Day trade knockout here. It's been a crazy week in the market. Here we're going to do an analysis to be able to prepare for Thursday and Friday to finish up the week. So, without a doubt, guys, let's get into the video and look at this from a technical analysis perspective. So, with that being said, notes again like usual. I just wanted to go over a little summary, just something to consider. So first off, we've had a lot of bearish downwards movement. Obviously, the sellers are in control at the moment. And one thing that I want you to understand is that for me tomorrow, I am actually thinking of somewhat of a counter trend trade. Not necessarily for like the bulls to actually dominate the market all of a sudden. Obviously, that's not going to happen. But I'm talking about just like as a pullback from a higher time frame perspective. That is something that I view as likely, but I'm not going to have a bias for it. So just to summarize, one thing to take into consideration is a counter trend is on the table. We did not have market internals, as you can see here. Let me show you guys. 1 second. Let me minimize this, guys. My bad. So as you can see here, we're gonna go over this later, but overall, market internals did follow downwards, along with showing signs of sellers on the Monday and Tuesday session, mainly the Monday session. However, it didn't really have any follow through on the Wednesday, and not too much on the Tuesday session. So I do view that as a possibility. However, understand the market can do anything. It can chop around tomorrow. It can move lower tomorrow, or we can get the setup I'm looking for. It's just about managing the risk properly to make your losers smaller than your winners, and just going along with what the data gives you and adjusting, but having a proper strategy and not breaking your rules and being more focused on the strategy over the profit. So let's get into the analysis. When we look at, we're going to start off on the day time frame chart, guys. Excuse me. Beer break. Blech. So basically, at the moment, you can see here we're in a very strong downtrend. At the moment, we're at the lows. So obviously, what's something that I always speak about. You don't want to get trapped at the lows with any FOMO buyers. You want to look for an actual pullback. So don't just immediately get in just because you're anxious to and you're trigger happy to get short. And in terms of chart patterns, guys, everything that I have up here is currently the same. The only thing that's new at the moment is because, again, chart patterns typically occur whenever there's a sign of a reversal. We already got the reversal. We're moving to the downside. But one thing that I am noticing that could potentially happen is a potential day time from head and shoulders, and the neckline would be right here at $502.20. So that's just something to keep in mind. But at the moment, bears are really dominating the market. And from a Fibonacci perspective, we don't even really got to chart it. As you can see here, from the highs to the lows, you can see here that we're going to definitely be below the 38.2% retracement. Yeah, obviously. So there's not really much to go off of that when it comes to looking to see how strong this selling momentum is. It's pretty strong, guys. And overall, the context is bearish when you look at the daily chart. Now, when we go to the market profile, just to see fair value from a fair value perspective, guys, you can see here that on the Monday session we had all this down here. We had an overlap to the downside and then a clean break to the downside. So fair value is currently at the lows of this downtrend. So right now, fair value is going along with this price action here. So it's showing more strength as well. More data is going in alignment with showing that the sellers are strong at the moment. And in terms of, let's see here. So again, now let's move on to the hourly chart, guys. When we move on to the hourly chart, you can see it's the same as a day time frame chart. We're still at the lows of this, obviously, and now the downtrend is a lot more significant. As you can see, equal high, pretty much equal high, lower high, fractal lower high, and then now we got a real big lower high. So obviously there's a lot more space to work with, and the bears currently have given themselves lots of wiggle room and have done lots of work to reverse all the shit that the bulls have been doing over these past weeks, especially ever since December, since we've been shooting up. So basically, the bears at the moment, they're so strong right now, they can afford so much pullback, guys, because again, the day time frame trading range that we were in previously that I mentioned is all the way over here at $512.99. So at the moment, we're at $500, and we got all the way to $499.12 at the lows of this day. We broke below 500. So at the moment, the bears don't even have to worry at the moment for the bulls to step up. It's very unlikely at the moment, but again, in the future, obviously the markets churn and chop, reverse, all this shit. So, but I'm just saying right now, bears are in control at the moment. And in terms of where bulls would need to have price action, first off, they got a lot of work to do. Again, it has to be any price action above $512.99 in order for it to actually be considered like the bulls are going to step up for real, not just some little counter trend price action to the upside. That doesn't really matter. And in terms of the setups I'm having, so first off, I want to point out it's the same things as always. Let's go for the setups to avoid. Setup to avoid number one is don't be too biased for that counter trend stuff I was talking about. Just go along with what the data tells you. Don't take trades without the proper 15-minute higher time frame confirmation. Don't chase the market. Look for a discounted price entry, and also have higher standards for the trades I take. And overall, just don't be too biased. I already mentioned that, but I just like to cover these things and have the foundation set in place. And I only got two scenarios in play at the moment. The counter trend scenario that I'm talking about is a higher low above the potential day time frame head and shoulders neckline at $502.20, and my targets would be $504 and $505 is the optimal target. And the only bear scenario I got is a 15-minute lower high below $500.48, and we would target $500 and we would target $499, and then $498 is the optimal target. And let's look at the market internals, guys, as mentioned. So again, look at this. We had a significant day on the dollar sign Vols when you look at the Monday session, which was the very big selling session that we had, full $12, which is pretty good for the bears. And then it started to die off a little bit on Tuesday, and then really started to look choppy, even with this downward movement we had on today's Wednesday session. And then the same thing applies. It really validates the counter trend scenario that I'm talking about for tomorrow or Friday, potentially. Again, not guaranteed, but potentially when you look at the dollar sign ADD and especially the tick, guys. Strong, weak, and then weak. Strong Monday, weak Tuesday, weak Wednesday. So again, all of this is showing that with all this bearish action that we got going down, again, yes, the bears are in control, but again, are we currently oversold at the moment? And old money and old business needs to be concluded in order for new businesses continue. And are the sellers currently content with where they're at, ready to sell parts of their position, looking to get in at a discount price entry, looking to add more volatility to the market? Only time will tell, but that's something that I view as an edge and a probability that could happen on Thursday or Friday. So again, that's my analysis for the day. If I'm wrong, just tell me I'm stupid. Tell me I'm stupid. But again, guys, I'm always happy to do this, looking to make people laugh and looking to make people smarter. So I'm glad to help you guys. Stay